Last week was generally positive for equity markets, with the standout performer being the S&P 500, which was back retesting the key 2820 resistance level, which has not been properly breached since October 2018. Wall Street was somewhat hindered by comparison due to the 10% decline in the Boeing share price. Moving on to next week, with potentially influential market updates from major central banks, including the Bank of England, Federal Reserve, Swiss National Bank, minutes from the RBA and the Bank of Japan. With so many updates from these central banks throughout the week, traders will need to be aware of the dates and times of the updates, particularly for those who trade the relating currencies. Cable was particularly volatile last week, primarily as a result of the votes in the UK Parliament, which pushed the pound to its highest level against the dollar since June 2018. Volatility shows no sign of letting up in the coming weeks, as Wednesday morning hits with the UK data in the form of retail price index, producer price index and consumer price index. This, coupled with the Federal Reserve's interest rate decision and monetary policy statement, followed by an FOMC press conference, could make for a busy day for those trading cable. Since the turn of the year, GBP has continued to strengthen against the Swiss, trading at 10-month highs. Thursday sees this pairing come into focus as interest rate announcements from both central banks are due to be released. First up, we get the Swiss National Bank's latest verdict on interest rates, accompanied by the monetary policy statement at 7:30. As we strike midday in the UK, it's over to the Bank of England. Although no change is expected, special attention will need to be paid to the minutes released at the same time as the rate decisions. They give a full account of the policy discussion, including differences of view. The euro has been under pressure since January, with apparently little reason to strengthen against a multitude in currencies, including the Canadian dollar, as it is currently trading just above 2019 lows. Friday could be an interesting one for this pairing, as we get manufacturing and services PMI figures out in the morning. The manufacturing sector dominates a large part of the total GDP. The manufacturing PMI is an important indicator of business conditions and the overall economic condition of the eurozone. A result above 50 signals they could be viewed as bullish for the euro, whereas a result below 50 could be seen as bearish. In the afternoon, we get CPI from the Bank of Canada, and core CPI excludes fruits, vegetables, gasoline, fuel or natural gas, mortgage interest, intercity transportation and tobacco products. These volatile core 8 are considered as a key indicator for inflation. Brent crude oil reached 4 months higher last week as a production curb agreement by OPEC and its partners, along with US sanctions on Iran and Venezuela, tightening global supplies. An unexpected decline last time in the US. Crude oil inventories and production also supported prices. API weekly crude oil stock data on Tuesday and EIA crude oil stock change on Wednesday will be important to watch for changes in storage levels. For more information on our economic calendar and company results, please see our week ahead. Thank you.